I'm Shane Kelbell, President of Credit Solution Group, and this is the real cost of bad credit. So we're going to go through some numbers. We're going to go through the real cost of a mortgage, the real cost of an automobile, and I'm going to compare two friends. I'm going to compare Mike and Mac. You know, they grew up together. Mike took a little bit different road, maybe had some hiccups, forgot a couple payments. His credit score is 620. Mac, on the other hand, solid as a Mack truck. You know, he's at 720, rolling with perfect credit. So we're going to have the example of a $250,000 mortgage, median home price $250,000. With a 620 credit score, based on the calculations that I put together, Mike would qualify for a 7% interest rate, where Mac is going to qualify for a 5% interest rate. That in itself is going to get Mike a payment of $1,663. That gets Mac a payment of $1,342. You can see right on the mortgage alone, Mac is making $321 just for having a 720 credit score. I'm sure you can see where improving your credit score is going to have a huge impact. A loan on your mortgage. Now let's touch base on a car. We're going to hit on Mike's car. Mike, unfortunately, with guidelines tightening, lending restrictions are much tighter. This is a unfortunately competitive interest rate for a 620 credit score, 24%. I've seen them up in the 30s with a 620 credit score. And then you're going to have Mac, again, with the credit crisis and lending and everything getting a little bit tighter, including the automotive industry kind of shaking down and pushing things together. There is still some incredible incentives from franchises, and 0% is still available. So you're going to have Mike, who's stuck with a $719 car payment, and that's on a $25,000 vehicle. So we're not looking at a brand new BMW. I mean, we're looking at a new middle class car or a very used BMW. So a $25,000 vehicle gets him a $719 payment, while Mac, he's only got a $416 payment, and every dollar he's paying is going to principal. So he's going to be in a better position, say in 3 years when he decides to upgrade. Everything he's paid has gone to principal, so his car is going to be he's going to have his balance paid down further, where Mike, at 24% interest, the interest is front-end loaded, so you're going to pay more interest up front. So Mike, at $719 a month, you can see that huge difference of $303. Mike's going to be paying a lot of interest and very little principal for probably the first 2.5 years. So at 3 years, he's probably not going to be in very good shape. So you're going to take those two combinations, and Mac is saving $624. And I don't look at it as saving, I look at it as making. Mac's making $624 for either being disciplined or for taking a step to hire a professional to help him improve his credit score. And a 720 is a very realistic score to get even from a 620, or I've had clients that have been in the low 500s and have been able to get a 720. I have one client that was able to get above a 740 with a very, very low 500 credit score, and we did that in a matter of just a couple months. So you took that savings, that little small $624 a month. Well, if you took that money at an average 10% interest rate, which is, if you look at the NASDAQ, that's about the average over a long term. So we're looking at 30 years. That $624 turns into $1,434,000, $1,434,000. And even if you took that and just scratched that 10% interest rate, just take it at a fixed annuity type rate of 3%, where you could go probably almost to get savings accounts with that, and you're still going to be at $366,000 just by having that better credit score. So you can see that at $624 a month savings, in less than 2 months, my service is going to pay for itself, and then you're going to be able to cash in, make that extra $624 a month, not only be able to have lower payments, but if you did want to have that higher payment, maybe you could be driving that new BMW, and instead of that $250,000 house, maybe you could move up and be in a $350,000 house. So you can see the cost of bad credit, and you can also see with these numbers right here, the real true benefit of good credit. I'm Shane Kelbell, President of Credit Solution Group, and this is the real cost of bad credit.